Hello everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat here. Just want to show you a couple of things here. It was asked on X about whether or not I'm still in Unity. The answer is no. I saw it around like the low 20s. I saw the writing on the wall. It does look like a little bit of a dead Cantonese bounds. It looks like it was going to drop underneath 20, and certainly it did. It went all the way down to about 14 or so. So I ended up rebalancing to something else. I don't remember exactly what I ended up rebalancing to. But a couple of things here, just look at the 20-month moving average. It's been negatively sloping. So I think that there is a potential where price might end up gravitating up towards the mid-20s if the overall market, especially if small caps, doing really well. I can totally see that happening, but I think it's probably going to end up getting rejected right around that area. So it's not yet like a long-term hold, but I think potentially could be a trade idea. But I'm not really much of a trader, and this is not financial advice. 20-month moving average is going to be a pretty strong resistance there. The other thing, you look at the monthly Ichimoku cloud, again, the mid-20s, which is where the Tenkan is negatively sloping right now, is going to be pretty strong resistance there. Now, if you ask me whether or not the price wants to gravitate up towards there, my answer would be I think so, because there are a couple of doji candles over here in the monthly on high volume. It looks like it wants to bounce, but I just think it's going to end up hitting some resistance. I don't know what's going to happen after that. So I'm not in Unity. I also have sold out of Unity around like the low 20s because of their earnings back then. It was really just not good at all. So I didn't really know when things are going to turn around. I didn't want to wait for it anymore, so I sold out of it. That's the reality. One other reason why I sold out of it was because on balance volume, initially I was seeing a lot of building up of bullish divergence that have been happening for about 2 years, with unbalanced volume just really nicely going up. The problem is it broke down underneath, right? So that really have lost pretty much all the bullish divergence there. There's currently not any bullish divergence that I'm seeing anymore. So yeah, I'm not really that into this stock anymore. Like, even if you look at the RSI is telling you that things have been, initially there's a little bit of a bullish divergence here too, but like that got broken. So I'm not really seeing a whole lot of higher time frame bullish divergence. I don't really feel that strongly about wanting to go in at this point. But if you ask me whether or not things are going to look better in the short term, I think things are going to look better in the short term. If you ask me why that is because for the entire year of 2024 has been kind of getting rejected here, the negatively sloping Tenkan. But right now, over the last few weeks, you're really flipping Tenkan from resistance over here and here to support, right? This is a pretty bullish development on a short time frame. So you can end up getting rejected in the low 20s or even the mid 20s, which is a pretty thick Ichimoku cloud over here on the weekly, right? A lot of confluence here tells me that you're probably going to end up getting rejected here in around the mid 20s if it ends up getting up there, which I suspect it probably will. But just be a little bit more cautious when it comes to a stock like this. Now, while I'm talking about retail heavy stocks, this is one that has been, Cathie Woods has been in it. So it was a pretty retail heavy stock. Another one to talk about is maybe C3AI. It had a pretty negative earnings, but then everything just kind of got bought up. Right now, if you look at a higher time frame, it still looks pretty bad. It still looks like accumulation because the volume is still basically saying that there's a lot of accumulation going on. It looks like descending wedge on declining volume. So as far as I'm concerned, I still think that this is a lot of reaccumulation that's been going on, and because the downtrend is happening on like very, very low volume, I'm really not that bearish on C3AI. It's just that it's still underneath a lot of resistance. So I can see that even if it bounces up, I can see $30 or even high 20s being a pretty strong resistance here on the monthly Ichimoku cloud. If I do the Bollinger Band, the 20-month moving average is rising up, but price is just way underneath the 20 right now, and the 20 is looking like it's flattening out. So you're going to end up having some resistance up here around like 29.30 for multiple things that I'm seeing, right? On the weekly here, it looks like a short time frame, we might have found a pretty decent local bottom. It does look a little bit more like a potential Adam and Eve bottom look to it. But again, if you look at the Ichimoku cloud, you're still underneath a lot of resistance. I think like 30 is going to be a very, very tough range to break above, even if it goes up there. But if it does, then you're talking about a 50%, move here, which is not too shabby if you want to trade the move. The only issue is even to get up to like 30, you're still having like some resistance up here in the short term on the low 20s, both in terms of the Tenkan and Kijun, as well as the Buan support band, right? So you're going to get some resistance up here, even in the mid 20s, before you even get up to like 30. And to get up to 30, you're going to have a lot of resistance here for C3AI, so I'm probably going to stay away from that. Another one that has been pretty retail heavy is Snowflake. Initially, when IPO, it was promised to have a lot of like crazy growth rates, just didn't really end up meeting expectation. Initially, it has a little bit of a ascending triangle look to it, but it turned out to be like a ascending wedge, which actually turned out just kind of ended up breaking down. This was the ascending triangle that I was seeing, but it turned out to be, I guess, a little bit more like a wedge. It doesn't really matter. The point is that it's broken down and it looks like very much a falling knife. If you're trying to catch a falling knife, if you want to just look at candle formation, it does look like it has two really nice wick over here. Potentially you got a little bit of a tweezer bottom, but there's no guarantee, because if you also look at a Bollinger Band, it's still expanding, and it's still expanding to the downside, so there's potential for room for price to go up even further down. And also the 20-month moving average is negative sloping, so let's say if we end up bouncing from here, you're going to end up having some resistance up here around like 150. It's going to be pretty hard for Snowflake to be able to break out above that area for a very long time. You do initially have a little bit of bullish cross here. Now you're having a bearish cross. So there's a lot of things that shows that Snowflake has lost its momentum. Even on the weekly, it's still underneath the Tenkan, right? So it's not like same thing with like C3AI, but it's not like Unity where it's really reclaiming the Tenkan. So even short term, I think that the negative sloping Tenkan can still be resistant. So it might even have a hard time short term break above like 120. And it might take a little bit of time and effort to try to break back above that range. So with this one, I'm staying away. I am starting to dollar cost average back into this one over here. This is QuantumScape, ticker symbol QS. A couple of reasons why I'm doing that is because I do have a position initially. I think my cost average is probably somewhere around like the sixes or so. That big reason as to why I'm doing QuantumScape is because I really do think the 20-month moving average is really starting to flatten. We've been challenging it once, twice, and three times. Can it go down further? Possibly, but I really do see some pretty nice basing behavior here, and I see that the 20 is probably going to end up getting challenged again, especially if small cap runs, right? Not much of a bullish divergence here that I'm seeing here on balance volume on the monthly. I do see maybe a little bit of a bullish divergence here on the 2-week chart, so there are a lot of these kind of nice basing behavior that I'm seeing that makes me feel like comfortable getting into a stock like this. The other thing too, if you also just kind of look at the weekly chart here, I do think that the 20 and the 50 are getting closer and closer together, and they've been really close together for close to a whole year now. All it takes is just a nice convincing bullish cross, a little nice green candle, get your bullish 20 to 50 week golden cross, and things could end up turning more decent from the technical standpoint. We've been challenging the Ichimoku cloud on the weekly 3 times now, just like we did for the 20-month moving average, right? Once, twice, and 3 times. And it looks like we're just becoming, the downtrend has just been decelerating. It looks like it wants to challenge the cloud. The cloud's still thick, so I think I probably still have more time to kind of accumulate. But I just think that this is pretty decent like base behavior, if you will. The RSI is telling you that there's a lot of kind of like these bullish diversions that's been kind of building up on the weekly time frame. On the 2-week time frame, you can see how price is kind of going sideways and down, but the RSI has just been kind of steadily going up, right? On the monthly, you're not really picking up that bullish diversions necessarily, but on the weekly and 2-week time frame, you're starting to pick up some of that. So I feel comfortable trying to catch this not so falling knife at this point, because I really do think that things are just a big giant rounded bottom in the formation. And I think that once it breaks above the cloud, it can hit like $13, $15 in a hurry. And there are some crazier targets up here like around $20. We're talking about potentially 2x, 3x, perhaps over the next couple of years is kind of what I'm seeing. So pretty decent risk reward ratio from what I'm seeing. So I'm still in QuantumScape here. Another stock I'm actually getting pretty bullish on, and a lot of people may be seeing the same thing I'm seeing, is Zoom. Zoom has been in a very, very brutal downtrend, but a couple things have turned into its favor. First of all, is very on the monthly chart reclaiming the Tenkan resistance to support, so that's something that is promising, right? The other thing too is on the weekly chart, it has really kind of broken above the Ichimoku cloud. It hasn't done that for a very, very long time. It has finally done that, broke above a vulnerable part of the cloud, which is really thin. Been back testing and so far finding support there. Could it break down underneath of it? Sure it can. But so far it's finding support there, so I'm going to give it a benefit of the doubt. This might actually be one that I might be interested in moving forward. The monthly chart is also telling you something very, very important, right? First of all, you have a lot of bullish divergence that's been building up for like 2 years now, with RSI kind of going up and also price kind of going down. Second thing is the monthly 20-month moving average has been very, very, very nicely curling flat now, and right now we're kind of reclaiming that from resistance to support. So all of these are very positive indicators here. Zoom is actually one of the better looking ones. When you're talking about plug, some people are just talking about plug here. It's a downtrend. 20-month is going down. There's really nothing to tell me that this falling knife is necessarily going to stop. You have these nice hammer, candle formation, but that doesn't mean anything. Here's a nice hammer over here. It doesn't mean anything. Here's an inverted hammer over here. It doesn't mean anything. It's a falling knife. I'm staying away from plug. Fubo doesn't look bad. I gotta say, Fubo looks like it's just range bound, and Fubo actually looks like it really wants to do an Adam and Eve. Usually how Adam and Eve formation happens is you have a nice bounce at a very strong support level, and then you go up and try to push through some resistance above. The Adam and Eve generally happens getting an Adam rejection over here, usually as a 20-month moving average that's downward sloping. This is exactly what's happening with Alibaba as well. Got rejected, had a false breakout above, broke down underneath because it's still not possibly sloping. It just ended up breaking down underneath and became a little bit more negative sloping. Now you have a bounce forming a little bit of a nice double bottom over here potentially, and you're hitting a little bit of resistance up here above at the 20-month moving average. And I think $2 zone is going to be a pretty important resistance zone to kind of get above. Once you get above and maybe even back test around $2, then you're talking about potentially challenge around like $3 to $4 here. It's not a bad setup, but right now there's no confirmation, so I'm not really entering Fubo, but I can potentially see, like when price is down here around like $1, I was very, very tempted to buy. I decided to hold up against myself to not do that. But right now it looks like we already made like a 50-60% gain, and it's getting close to resistance, so I'm going to be a little bit more cautious and see kind of what it works out, but I currently don't have a position in Fubo. Finally, I want to talk about one stock here, which is Lucid. Lucid, am I ready to buy this stock? No. I mean, you still have a negative sloping 20-month moving average. You can still potentially service some pretty strong resistance here. Even if price gets up to like $4 or $5, you're still going to end up hitting some pretty strong resistance there. So no, I'm not buying Lucid, but does it look like it could potentially end up flattening if price end up going sideways for late 2024 to early 2025? That's a possibility, right? But there's no confirmation. It's still a little bit of a falling knife until proven otherwise. It hasn't even tested the 20-month moving average, not even once, right? Since its fall underneath of it in April 2022. It hasn't even back tested the 20-month moving average. So to me, it's still a falling knife. I'm not going to get back into it, no matter how attractive the chart may start to look. There's also a lot of like valuation issues. They're also losing a bunch of money, but with rates potentially going down, maybe they'll survive. And if they survive, then maybe, who knows, maybe like the $2.5, $3 range is actually not a bad area to add. And also the Saudi Arabians have also invested a lot of money into the stock, so the institutional accumulation has been high. They could continue to dilute, right? But I just, I'm not seeing enough confirmation for me to want to enter something like Lucid. But anyway, just want to share you my thoughts about these like 6-7 stocks that have been pretty retail heavy for the last few years. That's been devastated, and what my thoughts are. Take care, bye.